Good evening, ladies and gentlemen. Big crowd tonight. I'd just like to call the special council meeting for Wednesday, May 8th to order. First of all, I would like to respectfully acknowledge that we are meeting on the traditional territory of the Algonquin-speaking people of the Kasepsum and Songhees nations, whose historical relationships to the land continue today. Can I get a motion to approve tonight's agenda, please? Thank you. Councillor Olson, Councillor Grove. Anyone object? Seeing none, unanimous, we'll move on. No public participation tonight because I don't see anyone from the public. No written submissions, so I shall move on to new business. Start off with the 2023 draft audit findings report. And are you going to introduce Lenora? Go ahead, please. Jen?
Certainly. Thank you, Mayor Kobayashi. So tonight we have joining us Lenora Lee, partner with KPMG, who will provide a presentation on the draft audit findings report. And then next item of business, you'll hear from city staff with respect to the financial statements that were subject to this audit. Thank you.
Thanks a lot.
Great. Thank you for having us at your meeting tonight. We just wanted to share a few highlights from the audit findings report, which is included in your package. Overall, in terms of status of the audit, we are substantially complete. There's no items that are outstanding other than discussion with yourselves tonight and acceptance of the financial statements. The auditor's report attached to the statements as drafted is a clean and unqualified opinion. It indicates there's no material errors in them and that they do present fairly in accordance with public sector accounting standards, which are the accounting rules that the city is required to follow as a government entity. There was 2 new accounting standards adopted in the year, which we'll speak to in our report. And the financial statements do reflect the consolidated position of the city. So it also includes its 20% ownership of West Shore Parks and Rec. There was no changes in our audit plan that we presented to you earlier this year, that we were able to complete all of the procedures as expected, and there was no modifications needed to what we were planning to do for procedures. The first area of focus we wanted to touch on is fraud risk, specifically related to management override of controls. With all audits, we are required to identify this as a significant risk and to respond to it in our audits. What this risk means is that management is in a position when they prepare the financial statements to be able to record entries that are outside the day-to-day course of operations. So the city has procurement policies and processes in place, check signing authorities, initiation and approval. Management is able to post an entry outside of that regular process just by virtue of having access to the system. And as a result, that becomes our area of focus. If there are particular incentives and biases, that certainly can be an area of focus as well. So as an example, if at the end of the year, the preliminary statements show one category of expenses is over budget and another is under, there could be incentive to move some of those expenses between categories to represent both under budget. So that is one of the examples of areas of focus for us and where we specifically look at the journal entries. Also, if there are significant estimates where management has applied their judgment in terms of determining a value, we would look to independent sources of information to validate some of the assumptions that they've placed within those calculations. In performing those procedures, we had no concerns to bring to council's attention. Another area of focus relates to this first new accounting standard, asset retirement obligations. And this standard represents an earlier recognition of remediation costs that may be required to be paid in the future. So a good example here, the most common we've seen as a result of this standard is asbestos remediation. When the city retires buildings, it may need to remove contaminants in a certain way that will cost more money than bulldozing a building and allowing the materials to be spread into the air. So management was required to evaluate all of its assets to determine what are the legislative requirements to retire those assets, and will it incur more cost that should be estimated and recognized today. Based on the age of the assets, there was no asbestos that was identified in any of the city-owned buildings. Management also looked at things such as lease obligations, any underground infrastructure, and also its ownership and partnerships with other entities. So for example, West Shore and the RCMP building. So out of that, there is no liability that has been recognized. And we concur with that result, that there's no material impact here and that there's no significant dollar value. There are some small amounts related to RCMP and West Shore, but based on the city's ownership, that was less than our audit posting threshold, less than $20,000. And so it was considered trivial and not material to recognize, with the administration of then having to amortize $1,000 every year. The next area of focus relates to capital assets, including developer contributed assets. In this area this year, the city acquired or paid $10 million for its own assets, and it also had donated assets of about $9 million. So those are primarily from new developments, donation of underground infrastructure, roads, sidewalks, etc., that are not cash payments, but they do have value and are provided to the city. Our audit work in this area consisted of looking at external invoices for payments made for purchased assets. And then for those that were donated, evaluating how management came up with the numbers to record as values for those assets. That was primarily from the developer, the cost that they paid to construct those assets, or from common per square foot measures that were determined internally by the city. There was no issues noted with any of those audit procedures. We did have one small recommendation to reduce revenue and increase DCCs to match the value of assets that were placed into service and the DCCs that were used. And that was recorded in the financial statements prior to inclusion in tonight's package. So that was about a $385,000 adjustment. The next area of focus relates to government transfers, primarily grants. In this area, we primarily look at the cash received, and we spend some time looking at the restrictions on those monies to determine if they should be deferred on receipt or recognized as revenue on receipt. The largest this year was the Growing Communities Fund, $6.6 million. Based on the terms of this grant, it's quite a broad spend that the management and the city can spend on a number of different items. And so the conclusion that management reached, and we agree, was to bring that into revenue right away at the time of receipt and place it into reserve. So it will be monitored and tracked from spending of reserve, but it did come into revenue in 2023. And you'll notice that it's quite a large and significant amount. So you'll notice that as a factor for increasing total revenue this year. Cash investments and debt, we are able to get some pretty strong audit evidence in these areas because we confirm directly with the bank and MFA what the balances are in their records and ensure that they are the same in the city's records. There's one historical audit error here that is unadjusted, and it's primarily timing difference, that the city earns interest on its sinking fund contributions, and it has not accrued for the amount of interest earned or debt forgiveness between October and December. That will wash out at the time that the debt is fully defeased, but there is a small portion that relates to 2023 that is not recorded in 2023. Lastly, salaries, benefits, and expenses. In this area, we primarily perform budget to actual review, as well as current year to prior year procedures. We investigate any significant differences or deviations, and no concerns or issues to bring to your attention here. Also this year, of course, there was a change in auditors. It's our first year with the city, and just wanted to note really strong teamwork between our team and your team here. Really happy with the collaboration that's been taking place, timely response to all of our questions, and really a mentality that the finance team really cares about the accuracy of these statements. They want to do the right thing, and they don't like having errors. So really appreciate the teamwork and collaboration there. The next couple pages, I think I've spoken about already. This is just a summary of any uncorrected audit differences. So the second one here is that timing difference I mentioned, 97,000 on the sinking fund earnings between October and December. And then the first one is actually a historical difference that doesn't relate to 2023. It existed prior to this. And there's a difference between the value of West Shore assets on West Shore's books owned by the city compared to what's in the city's records. And so management does want to further investigate that during the course of 2024, resolve it so that those figures are the same, but just need a little bit more time to dig into what that relates to in order to correct it accurately. And then the one that I mentioned already in terms of adjustment was the reduction in revenue and increase in DCC. Control deficiencies were required to report to council on any significant or material control deficiencies that we identify in the course of our audit. So this would be significant risks where something could go very wrong in the financial reporting. We have no areas of deficiencies to bring to your attention and have not noted any particular concerns. Management always has a working list of performance improvement observations that they're working on, but nothing that we feel could result in a very significant or material error to the statements, and good controls in place from the process walkthroughs we performed. Lastly, I thought I just mentioned there was one other accounting standard that was adopted during the year. It relates to financial instruments. This allowed the city to pick a policy around valuation of investments in particular, whether those are valued at cost or fair value. The city has chosen cost in that it's a little bit less volatile. It actually doesn't have any market-based investments at the end of 2023. And so you'll see both that policy in the statements this year, as well as a little bit of additional disclosure around the city's exposure to things such as interest rate risk, foreign exchange rate risk, and liquidity risk, credit risk, and how the city mitigates those particular items. Those were the highlights I wanted to touch on in this report. There's a few appendices that I won't go through in detail, but happy to address any questions on either those or the contents of our report. And again, just like to thank the finance team and the city for all of their help with the audit this year.
Thank you very much, Lenora. Just open it for questions from council. And I don't know what's wrong with my system right now. Help. Help. Something's wrong here. I think you need to log me in. No, yeah, but it's just, it doesn't have the right screen on here right now for me. It's just got the login screen on. No. Sure. Oh, you're on? No. Any questions then from council? Seeing none, I have one quick question. Actually, it's to you, Jen. So I know that you know if we get the approvals and everything to go ahead with the public works building, so we do have a risk there. I think, in my eyes, I know this from past knowledge, because the fact that we do maintenance of vehicles over there, and so there's oils and gases that potentially get into the soil. So is that something we worry about in the future if we do this, or have you accounted for this? It's just a quick question.
Thank you for the question. Our CAO has just reminded me that we are about to do some testing.
Okay, that's all
of
I
that
wanted
facility.
to know. I've been burned by it before. That's why we talk about fiberglass or asbestos in pipes and all that. I know that's another big issue, especially we had a fuel station and it was all in the soil. We had to remediate. That was $500,000. Okay, thank you.
Thank you.
Thank you very much, Lenora. Great. I'd like to thank you and your team. And a particular big shout out to Jen and Kathy. and the finance team here. Great job. I just feel so, it's nice to have that confidence that you don't have to worry about that side of the fence. So thank you very much to everyone. Thank you. Okay, we move on to 4.2. Kathy, it's over to you, the 2023 consolidated financial statements.
Yeah, part two. If it comes up. Oh, you know what? I didn't use the clicker yet. Are you gonna work for me? Yeah, I don't know how to do this. There we go. Okay. New technology. So the results of the financial statements, which you have obviously included in your package, show that this is just a high level summary of the income. Sorry, what happened? Here we go. A high level summary, I guess, of that we show you guys every year just to show the difference between revenue, expenses, and annual surplus when we compare the results from actuals to the budget and then the prior year. So nothing unusual here to report. It is a little bit interesting because of the way we report to you guys every quarter versus the way we have to report for financial statements under the public sector accounting standards. So some of the revenues look a little bit interesting compared to what we have shown, but at the third quarter, we projected a surplus of $326,000 on the operating side and a $17,000 deficit for sewer. And those are coming in now at about $934,000 on the operating side. So when you see this large number of $26,000 income on the face of the statement of operations, that is adjusted for a bunch of different things that we normally that we don't report on to you quarterly. So one of those is like we have to back out the transfers to reserve, the developer contributed assets. So there is a number of items that we don't budget for, but are included in that make that number look inflated. But it really does reconcile to the numbers that we have been reporting to you. And the change from the 326 that we forecast at Q3 to the 900 plus that we're seeing now is largely driven by the increases in investment income that we have been seeing and recognizing and speaking to when we've been reporting quarterly. Next slide. I guess I'm in charge.
Okay, go ahead.
Oh, did you have a question?
Sorry, Councillor Day.
Yeah, sorry. I just, because last night when we were talking about the proposed, God, the name is gone again, the infrastructure replacement capital fund, we were talking about those investments, and it was mentioned at committee that the city's investment strategy is not something that we see or are really aware of or informed on, or not a decision that council really participates in. So I just wanted to speak to that because you mentioned it is included in these numbers. And I think it's, even if it's not something that we would or should control, it's something that I would like to understand and be more transparent about, because obviously it's wrapped up in everything that we do. And therefore, I just wanted to highlight that's something that I find this slide a little bit difficult because it doesn't look like anything I work with when we're doing our budgets to begin with. So it is a good representation. I understand we're looking at, you know, what was our actual versus our budget and what was it like the year before? How are we doing kind of a slide? But at the same time, it has a bunch of things rolled up into it that makes me a little uncomfortable when I just don't know anything about those things.
Right. Thank you for that comment, because we actually have been working on the investment policy so that we can bring that forward, because we also want to increase the transparency and the communication with council around those decisions and those results, and more frequent reporting on that behavior outside of the lump sums that you're seeing.
Thank you.
So I have a quick question too. I'm sorry, when I see numbers and things don't add up in my head, then I have to question it. So there's a $2 million difference, right? Your expenses plus your surplus should equal your total revenue, correct?
Sorry, where's the $2 million difference?
So, for example, for 2023, your actual expenses are 29 million, surplus 26, that's 55 million, right? And you show the total revenue is 57.
Right, 57 and expenses are 31, which means the accounting surplus is 26.
Yeah.
But the budgetary surplus is only $1 million because we back out the things that we only recognize under PSAB, which are developer contributed assets, which were 9.5, developer contributed 8.5 for capital and 1 million for sewer. And then we back out the capital projects funding, which is another 10 million. So that's what I mean when it is confusing when we report under the budgetary surplus, which is the requirements, right, for local
Yeah.
government. We're reporting according to the bylaw, but we can try to increase the, I would love to start including a slide that shows you that reconciliation because we absolutely prepare that so that you can actually see how that transfers to. We've been talking about that between Jen and I, just so that you can see the difference quarterly, because it is a jump even for us to move from PSAB to the way that we are reporting to you guys quarterly. So that's part of the special initiative that we have around improving our tools within finance so that we can provide better continuity. It's a continuity issue almost between the reporting.
Okay, yeah, but like I said, I'm just looking at it as.
It
the
adds
numbers.
up. I can show you after if you like.
Yeah, I believe you actually.
Yeah.
It's just when I see that.
No, for
discrepancy,
sure,
I
it's a
sort of turn my
valid-
head sideways a little bit.
It's
Okay.
totally valid, which is why I went through the exercise so that I could
Yeah,
share it with you.
sorry.
And just to complement what Kathy's mentioned, I appreciate a couple of these comments that have been made. The cash flow statement states the cash that the city has earned on investments, and that's where you'll see in 2023 we were at 2.4 million, and
Gotcha.
last year I believe it was closer to 1.4, 1.2.
Makes sense. Yes, it adds up.
And so, but I think what would be helpful, some context on the investment returns is when we return quarterly, to just include a little bit of a snapshot. These are the city's current investments, and these are the current rates of return that are driving those earnings throughout the year. I mentioned this during budget deliberations. The investment earnings are proportionately allocated, certainly where they are legislated. So DCCs, the proportionate earnings will be restricted directly there. So they won't hit, in this case, the income statement.
Okay.
But
Yeah.
it is helpful to understand that. I typically highlight my favorite note to the financial statements is the accumulated surplus note. I find that is the most helpful to understand the movement in the city's reserve balances and the city's operating surplus, because as Kathy said, the face of the operations is quite misleading, given that every time we're before you, we're speaking to you from a service delivery perspective. And to be direct, our budgets are all about authorizing cash expenditure. And then we present these statements, which are not just cash, it's PSAB. And so it involves a lot of non-cash activity. In addition, the biggest difference when we're comparing budget with actual for our city is that we do not budget for developer contributed assets. And in a municipality such as ours, where we are seeing that development annually, it's always a variance that we're explaining away. So the face of that statement, you could pull Colwood statements the last 5-10 years, and that accounting surplus always appears so large. And the primary reason is because of the developer contributed assets.
No, I understand. Perfect.
Yeah.
That's why the income statement's meaningless to me, to tell you the truth.
And in an ideal world where we would have capacity, I would prefer to bring forward a Q4 statement that looks and feels the exact same way as the other quarterly statements you have, so that you can see that, approximate $1 million operating surplus that we have not the 25 that's appearing on the face of
Thank you.
the statements. Thank you.
That's great. Go ahead, sorry.
I broke it. Oh, now, here we go. This is just the statement of financial position summarized by category. I don't think there is a lot to say here other than we have an increase in our net financial asset position by 9 million, and TCA continues to grow as long as we are purchasing faster than we are amortizing our assets, and a nominal amount of non-financial assets. This slide, like Jen was saying, is the one she loves the best because it shows you there's less ambiguous, they're not ambiguous. There's no PSAB influences here really. This is the true status of our change in surplus and the reserves, which I think we also have this schedule here, which is the supporting one from the financial statements, note 12. And I think unless there's questions on that, I do need to point out though, there was a change to the statements. It does not affect the actuals. It was just that the West Shore Parks and Rec, when that, but when their budget was consolidated, our notes on note 17, and it was just the user fee budget and the other income budget was missed. So it doesn't affect our actuals in any category, but you should be aware that the user fees and other revenue were omitted in the initial draft, and that has been corrected. There, any questions? Happy to answer any questions.
I'm assuming you've already made in the consolidated financial statement, you've adjusted it for the reduction in revenue, the 348,000, it's all done, right?
Yes.
So, okay, thank you very much.
Yes.
Just wanted to confirm that. Any other questions from council? Seeing none, can I get a motion? Councillor Grove.
I was just suggesting I make a motion to recommend to accept the staff recommendation.
Okay, super. Seconder, thank you. Councillor Wilson. Discussion? Seeing none. Any objections? Seeing none, unanimous. Motion carried. Thank you very much. Thank you, Kathy. And we'll go into bylaws, and I guess that it's just, yeah. It's bylaw number 2032, sewer utility fee amendment, first, second, and third reading. Going to get a motion for the recommendation. Councillor Grove, Councillor Olson. Discussion. Seeing none, any opposed? Seeing none, unanimous. Motion carried. Motion for adjournment, please. Thank you. Thank you, Councillor Day, Councillor Grove. Any opposed? Seeing none, thank you very much. And we'll move right into in camera.